there, good evening. Welcome to State of Affairs here on GH1 Television. I am Francis Abba. It's another Thursday night, and we're here for deeper insights for the big conversations that have taken over the headlines this week. This week, the talk has been heavy on the new taxes, which take effect this month. Some have called it the killer taxes. Others say it's the inevitable, with the only option being to borrow on the international market. And with our debt stock now over 75% of our GDP and a fiscal deficit of about 11% yawning at us, the reality is that we all have to shoulder the burden. But how do we carry this load on our shoulder? And have you started feeling the pinch already? But how will the deductions be done? And what will be the consequences for our personal income, our business cost, and the health of the economy? Tonight we'll get some education from the Ghana Revenue Authority, get questions answered from the business community, and get some perspective as well from the one who looks at all the numbers as a consultant in tax and proffer some solutions about how we can do better when it comes to the matter of taxes. We're talking taxes and the state of the economy tonight on State of Affairs. You're welcome once again. I am Francis Abba. Let me introduce you to my guest for tonight's conversation. We're joined by the head of audit at the Large Taxpayer Office for the GRA, Dr. Martin Yamborikia, and I hope I got the pronunciation correct.
That's correct.
Thank you, sir. Thank you for joining us tonight. Also, the president of the Ghana Union Traders Association, Mr. Joseph, for being a very good friend of ours. Mr. Obeng, thank you for coming tonight.
Thank you.
Okay. And Timor Francis Boy is a tax consultant who's made time to join us. So 2 men in suit, in fact 3 men here in the studio in suit, one in kaftan. The businessman is in the kaftan, you can imagine, for our conversation this evening. So, gentlemen, thank you for joining us. And for my friends who say there's no gender balance here, forgive us. The next edition will definitely make that representation fairly done. So, with that out of the way, we would first take you through the key taxes that have become contentious. People are asking questions about how it will be implemented. The COVID-19 health levy is the first that we will look at. And the GRA has some detail in a presentation I want to go through tonight. After the presentation is done and some questions asked, we would engage the business community on any questions they have about these new taxes and how they will seek to implement it, and also some other niggling matters that will come up about how this correlates with the state of the economy. So, Dr. Yamborikia, I'll start with you. And to go through this presentation, we are fully aware. Let's start with the COVID-19 levy. From what we see here, the detail given, as was given in Parliament, suggests that it's to help raise revenue to support the COVID-19 expenditures and other related matters. Also, the levy will be charged at a rate of 1%, calculated on the value of taxable supply in respect of 2 things: supply of goods and services made in Ghana, but excluding exempt goods or services, and then the import of goods and services in Ghana. Doc, first question, and help us with some education on this. When these 2 elements, we say that that's where the taxable supply and the 1% will apply. In very simple terms for the layman, what does this mean?
Okay, thank you very much. And thank to our viewers also. What it simply means is that the COVID-19 recovery levy is a tax that will be imposed on items that are subject to VAT. And items that are subject to VAT are other supply of goods and services are made in the country, other than those that are exempt, or import of goods or services into the country, other than those that are exempt. So it's going to be a 1% levy on all items that are subject to VAT. Okay.
And for those who are watching at home, when we talk VAT goods, give us some examples. Which ones are we talking about here?
Well, so VAT is more inclusive than exclusive. So except where the law says that an item is exempt, all items are taxable.
Okay.
We have some few that are exempt. Example, we have agricultural product in their raw state. We have medical supplies. We have residential accommodation. We have education services, among others. But whatever that is not mentioned under the first schedule of the VAT Act is actually taxable.
Okay, so that's for where it is charged. Now, some have asked questions about how the computation will be done, and there are questions being raised about it. So let's go through it. You say that the levy is not subject to input tax deduction.
Yes.
What does that mean?
Okay, thank you very much. So in our VAT system, we operate a 2 system. We have those that are under the standard rate, and then we have those that are under the flat rate. Now, those that are under the standard rate, what it means is that, as we know, VAT is a consumption tax. So it is the final consumer who is supposed to bear the tax. However, if you are involved in the supply of goods and services, in order to be able to provide the goods or services, you might have procured items or services in which you pay VAT. Because you are not the final consumer, it doesn't become your burden. And then when you sell or when you supply the service, you also charge VAT. So the mechanism that is used is that you deduct whatever VAT that you have paid, which we refer to as input tax, against the VAT that you are charging, which we refer to as output tax. That is the mechanism that we use for the standard rate. Now, what it means by saying that it is not input tax deductible means that because it is not a VAT, it is a levy. When you pay that levy, it becomes part of your cost of production or your cost of sales, and it's not subject to input deduction. It means that you cannot recover it, unlike VAT, where you can recover. For those who are under the flat rate, they are supposed to charge 3%, and the 3% was arrived at. I'm sure Dr. Bing knows about it. His people said, well, the mechanism for calculation was complex. They wanted a simple method. So we came out that for wholesalers and retailers of goods, they would just apply 3% flat rate on whatever sales that they have made. What was it before? That is now 3%. Yeah, it was the same standard rate. Before. 3%? Or it was 2? No, it was 17.5. Okay. When VAT, National Health Insurance Levy, and GHOne was all together. Then it was now made 3% flat rate. But that it means that whatever input taxes that you incur by way of VAT, you are not entitled to recover because it becomes part of your cost. But when you now make a supply of goods, then you'll be charging 3%. Okay. So with the introduction of the COVID-19 recovery levy, they will now be charging an additional 1% on whatever taxable supplies that they make as a COVID-19 recovery levy. And that is also not subject to input because already those under the flat rate don't recover their input taxes. Okay. Now, for the big businesses, I'm sure the internal auditors or those who handle their books, the accountants will have a clear idea. But for those who want to see practically what the numbers look like, you've been kind enough to put an example up. And let me say that in this presentation, you say that the 1% COVID-19 levy shall be computed on the value of the taxable supply exclusive of NHIL, GHOne, and GHOne levy and VAT. Yes. The example you give for the calculation here is what I find a little interesting. And you might have to help us in understanding this. Yeah. So I see taxable supply here for 89,000, right? Yeah. Then I see GHOne levy, NHIL, and COVID-19 levy all calculated on the taxable supply, right? Yeah. That cumulatively brings us to 5,340 out of the 89,000. Remember, GHOne levy is 2.5%, NHIL is 2.5%, COVID levy 1%. That's at the top header. That's correct. Then afterwards, I see something here. You add a 5,340 to the taxable supply and take 12.5% VAT on the amount to give the 11,972. Is that what it's supposed to be? That's what it's supposed to be. But what does this mean? Why is it being charged here, added, and then VAT slapped on all of it? Okay. So if you look at the VAT Act 2013 at 870, it defines what a taxable value means. And it says that a taxable value is the cost of the item or the consideration paid for the item together with all taxes and levies, but excluding the tax. The excluding the tax here means excluding VAT. So in order to arrive at a value on which the VAT is supposed to be calculated, all other taxes and levies are normally added before you arrive at the VAT. So since we decoupled the Ghana, trust fund levy, and then education trust fund levy, and the National Health Insurance levy, then it now becomes levy. There are no more VAT, and therefore, in order to arrive at the value that you have to calculate the VAT on, those values must be applied for in line with what is considered to be the definition of a taxable value under the VAT Act. And in the same way, because the COVID-19 recovery levy is a levy, it must also be added to arrive at what we call a taxable value on which you now calculate the VAT of 12.5%. Okay, okay. Because I did some small what you call voodoo maths. This
value, the 5,340,
yes.
if you, and some people asked that question when this conversation started, that why don't we add 123 plus the 12.5 and deduct straight from 89,000? Now, what I realize is that if you do that, as against separating it and doing the deductions, the cumulative amount for this being these three items and the value plus the tax here added, as against adding all the four and deducting from the 89,000, adding all the four is lower than if you add this and that and the value you get. So is it like a strategy to delink so you get more in terms of the taxes that you take out of the taxable supply?
Well, so if you look at when the Ghana Education Trust Fund and the National Health Insurance Levy were decoupled, I mean, the government came out and said they wanted to raise additional revenue as a result of that. And therefore, they will now be considered a levy, which means that you are not entitled to recover them, but they will become part of your cost. So definitely, it will bring about a marginal increase in the VAT because they are no more calculated. Unlike where they were straight VAT or part of VAT that was calculated on the taxable value before the VAT. Now, they now become part of the taxable value. And therefore, there will be a little or a marginal increase in terms of this. And that will bring in additional revenue as the purpose of the law was. Okay.
So that's for the matter of the 1% COVID-19 health levy. That's for that one. We've dealt with that comprehensively. There are other things about percentages that you've done here. That one we'll leave it to the accountants to go and sort it out. If I do it here tonight, many of our listeners, our viewers will not get the entire picture. The last thing I want us to look at before we begin our conversation is on the implementation of the penalty and interest waiver as spelled out in Act 1065. Now, in terms of the details here, you indicate that the objective of this is to give clarity and provide guidance to the GRA officials and also taxpayers on the procedures to be followed in waiving of the penalty and the interest. You list those who qualify, but tell us, who are the persons who qualify for the waiver?
Okay, thank you very much once again. Yes, so the waiver is for two categories of people or taxpayer. One, we're talking about those who are already registered with the Ghana Revenue Authority.
Yes.
They have been assessed taxes and then penalties and interest, but are unable to pay. And this has a direct link with the effect of COVID-19, which happened in 2020, that as a result of COVID-19, people had challenges with their cash flow. And therefore, whatever interest or penalty that have been imposed on their tax liability, they may have challenges paying. So the objective is to relieve them of that burden by saying that, look, if between now and the end of December, you are able to pay the principal amount of the tax, then whatever penalties that you were liable to as a result of defaulting or not complying with the law, and then also whatever interest that would have been computed on it because you are owing government money, those things should be waived. Then you only be made to pay the principal amount. So it is a form of a relief granted to taxpayers to enable them to discharge their tax liabilities without the challenges of paying the interest and the penalty. Then the second category of people are those who have never registered with the Ghana Revenue Authority. And sometimes people get scared that if I go to say I'm coming to register, whereas I have been working, then GRA may impose penalties and interest on me, and therefore I wouldn't go at all. Government want to encourage people to voluntarily comply, but I said that, look, if you, between now and September 30th, 2021, come out to say that, well, I have been earning this income, but I have not registered, or I have this tax returns that I should have filed, but I have not filed them. I want to voluntarily come, declare my income, file my returns. Then whatever penalties and interest that would have been imposed, the government will tell them, no, we are waiving that. Don't pay, just start on a fresh note. However, whatever taxes that are due, those taxes will be collected because the taxes are due. But any penalty that would have been imposed because you didn't comply with the law, and any interest that would have been calculated because you're owing government money, all those ones will be waived to serve as a relief to you.
Dr. Yamorika, now you also mentioned those who don't qualify for this waiver. I thought everybody should be enjoying this waiver. Why do some people not qualify?
Well, what we're saying is that the waiver is a form of an amnesty that is granted to you.
Yes.
And what we're saying is that in order to qualify, then you should be currently complying with your obligations. so that from January 2021 coming, if you have any tax return to file, you have any tax obligation to discharge, then you need to do that. But if you are still defaulting, and then you are coming asking that I want to be forgiven of the past sins I've committed, whereas you are still sinning, then it doesn't show any genuineness on your part. So what we are saying that to enable you qualify, then make sure that you're on point with your current tax obligation, so that at least that would then serve as a basis for the past to be waived to enable you continue. But if you come and say, well, I have come for you to forgive me of the penalties and interest that are due for the past years, and then for the current years, I'm still not paying, then it doesn't show that you are genuine or you really want to comply with the law.
But if it's a matter of forgiveness, you must be able to forgive all involved once they've showed up to come and have things done and done properly.
Yes, but if you look at it in the Bible, somebody came to Jesus for forgiveness, and Jesus Christ said, I forgive you, but go and sin no more.
Yes.
If you forgive somebody and the person has to continue sinning, then that will not really...
So forgive first before you judge him for not coming early.
Yeah, that is why we have given that period that, okay, for all taxes, and don't forget that all taxes, whatever the period up to December 2021, any penalty, December 2020, any penalty and interest on it, at least we are forgiving you. But at least for the current year, which started from this, January 2021 to date, make sure that you are compliant on your tax obligation. Then you qualify for the waiver.
The waiver. Okay. So that's for the matter of the penalty and the waiver that has been captured in this presentation. We'll go for our very first break. When we return, we'll settle on this new tax that have been introduced. In fact, there was some talk about the one specific to the fuel price increases. That's got a lot of people talking. We will look at that. We'll also look to the entire tax regime we have. And since the advent of the Fourth Republic, whether we're getting it right on how we are doing tax administration and how we can improve to make things better. People cry about taxes, but are we getting the administration regime right? We will look at that after this very quick break. You're watching State of Affairs here on GH1 Television. I'm Francis Aben, back with more on killer taxes and the state of the economy.
Awesome screen, awesome camera, long lasting battery life. 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 It's wash, water, resistant, wash, water, resistant, awesome, 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 awesome. Awesome is for everyone.
Up this morning.
Nothing wakes me up better than a cup of cowbell coffee. Delicious coffee aroma.
How can you forget your lines again?
I'm sorry, sir, just that it tastes really good.
Cowbell coffee.
Enjoy the delicious creamy coffee taste of 3-in-1 cowbell coffee.
Love it. It's a beautiful day.
Waiting.
Cowbell coffee. Taste it, love it.
This advertisement has been vetted and approved by the FDA.
Everyone needs something. Sometimes they become person you wish you can just get a grip as soon as possible. And you will get caught with so many questions of the how, where, and when. No need to bother any longer. My name is Mama Preggy. I am here to solve all your urgent needs. Check my swag. Visit my website now at www.mamapreggymarket.com and you will find all range of products food items, mother care, and baby items that will just suit what you need to buy or sell with a simple click.
Call us on 030-2549-813 or 050-4709-463. Download the app on Google Play Store and Apple Store, and Mama Preggy Delivery will be at your doorstep with your orders. Mama Preggy, a time limit.
You always said I was like a perfume. You always felt my essence of love. You always encouraged me to live my life freely and to dazzle as bright as the sun. You helped me blossom and glow with confidence, to be the light that shows the way. And you know, Mum, of all the gifts this life has to offer, your love is the greatest of them all. Cherish every moment you have with your mother and celebrate the love between you. Make every day Mother's Day with Marion Luxury Perfumes, available at GH Perfumes Mall.
For many years of serving the world with herbal and alternative medicine, a combination of homeopathy, naturopathy, reflexology and many more, we've been successful in treating many complicated conditions. We deliver excellent and effective services to people from all walks of life through scientific and traditional means using electronic pulse machine, serogen bed, circulation devices, physiotherapy, massage and many others. We have a well-equipped laboratory with advanced diagnostic and treatment devices to help detect your illness, so we know the right medications to be given.
I had a serious cough for 7 times. I sent my spec to South Africa for tests. Nothing was found. I came to Dr. Amin. Within 5 days, I was healed.
Our zeal and passion to save lives and outstanding years of achievement have won several awards like the American Black History Honors, Master Practitioner of the Decade, amongst others. This is why we say, go herbal, go Amen. Amen Scientific Herbal and Alternative Medical Hospital. Allahu Shafi, God is the healer.
Alomo bitters. If you do me no chini, that's so authentic.
And you, and you ain't tribute.
Alomo, ya. Mbroma yenji yenye. Midi akimpa kwesha alomo ya. Chami alomo na usisenkura. Ya koni say ya. Ya no say ya. Ya koni say ya. Ya koni say ya. Ya koni say ya. Alomo ya. Mbroma yenji yenye.
Alomo bitters, 20 years the Camry Pakroji. No Nyansem, one Toma Nipa winning feed watch and Sessa Pimphonum. FDR, you say Jadian Crat will more Giatum say, yeah. Alomo, authentically African.
You're watching State of Affairs here on GH1 television. Tonight we're talking about the killer taxes and the state of the economy. In the very first part of the show this evening, we've looked at the two key lines for the new taxes that have been introduced, the COVID-19 health levy, recovery levy, and also the matter of the penalty and waivers and how it will be implemented as spelled out by the GRE. Now we'll look to the meat of the matter, our tax regime, whether these taxes in itself are progressive or regressive, and what we need to do better. The businessman is in the building. The president for Guta, Mr. Obeng, is with us, as well as the tax consultant, Mr. Francis Boy, is with us, Timor Francis Boy, and of course, the assistant commissioner, head of audit, large taxpayer office for the GRE, Dr. Martin Yamburkia, is also with us tonight. So, gentlemen, you've listened to the presentation done by Dr. Yamburkia on the new taxes that are being introduced. But before we even delve into it, spare me a minute to go through the taxes that we have on our books as we speak. And it's quite a long list. I may have to take my time and have you have it, because it's important people appreciate the lines of taxes that we have in the country. There's the pay as you earn, there's the gift tax, there's tax stamp, there's vehicle income tax, rent income tax, capital gains tax, value added tax, that's standard and flat rate, VAT on imports and exports, NHIL get fund, corporate income tax, you've got withholding tax, rent tax, communication service tax, custom tariffs and levies, mineral royalties tax. There's also the road fund levy, the energy fund levy, the price stabilization and recovery levy, as well as the national electrification scheme levy. Then special petroleum tax is also here. Now the new ones that have been introduced, you've got the 5% financial sector levy, the COVID-19 1% that we just spoke about, the sanitation and pollution levy, then any sector recovery levy. Those are the new ones and the lines that have been introduced. Francis, let me start with you on this, namesake. If you look at the tax lines that we have in the country, they look like a lot. But are these tax lines and what we realize year on year show that we have a robust and efficient tax administration system or regime in the country?
Okay, so Francis, I think the tax laws are there, but we seem to have some deficiency in terms of its implementation.
Okay.
So the number of taxes you've mentioned, we can't categorize them into, let's say, direct and indirect. So if you have an income tax, if you're an employee, you will normally pay a PAYE. If you're a company, then you will be paying the corporate taxes. So the taxes are there. We think that the implementation is what we are not doing well. And that is why you see a shift from the direct tax to the indirect taxes, where we are more interested in collecting taxes in the form of VAT and levies. So probably we are not doing too well.
Okay. But listening to the new taxes that have been introduced, does this go to show that we are doing a lot more thinking outside the box in how we target and collect revenue from citizens and from businesses?
I think over the years we've not been too well, like I mentioned, because if you introduce more taxes in the form of levies, the poor is the one who is suffering. Indirect taxes, we know they are regressive because the poor gets to pay more of his income in the form of that indirect taxes. We should have been looking more of the direct taxes. Areas where we think that has been neglected are the informal sector and then property taxes. We don't see that one coming in as we expect. So the only option available is to go the way where we find ourselves now. Introduce taxes that everybody will be affected. But we know that that is not the best because you end up suffocating the poor. And that is what we are saying, that we need a shift in our tax policy.
So as things stand now, our tax regime, which is largely, a lot of it's down to consumption tax, targets a lot more of the poor who are in the majority than the rich.
The net effect is that the poor gets to suffer the more.
Yes.
If you look at the total tax revenue we collect, about between 53 to 60% comes from indirect consumption taxes.
Yes.
And just about 40% is from corporate taxes, mineral royalties and petroleum taxes and all these things. That is not right. We should be doing more of the direct taxes instead of the indirect.
And what is it down to? Is it that the system we have cannot guarantee us getting more from direct taxes?
I think
the reason we're doing a lot more in indirect taxes.
The indirect tax, number one, is easier to collect. You don't struggle too much. Probably the cost of collection becomes less than the direct taxes. The indirect taxes too is less, let me say, less political, because the people who pay, the more you buy, the more you pay. But for the direct taxes, take for example, taxing the informal sector. If you go and introduce some levy, there was a levy, some taxes that was introduced on Kayaye.
Yes.
And quickly we withdrew it because we thought that it was a nuisance tax. These are affecting the Kayaye directly. And because of some noise they made, we had to withdraw it. So the entire policy is geared towards taxes which are easy to be collected than those ones that we need to struggle them more to collect. But we think that with the new policies that are coming, for example, linking the Ghana card to the replacing the Ghana card with the tin.
Yes.
And then
no, replacing rather the tin with the Ghana card.
Good.
Yes.
So we believe that GRA will be able to tap into that data and use it more to tax the informal sector than what we are doing now.
I think I missed the step. Mr. Obing, with the presentation that was done this evening, do you have any questions for the GRA about how to administer these new taxes that have been introduced?
Yeah, my question is why would they be taxing the levy? Because if we calculate the 1% first before the 3%, it means that we are not paying 4% VAT now. Unless we are charging them separately and then add them together, then it becomes 4%.
Yeah.
And even we don't want anything that will add stress on our business because time is of essence for us. And so if you are paying flat rate of 4%, it means that inclusive in it is the COVID 1%. And then when you are filing the taxes, you just factor, they provide a line for you to. Now, as I'm speaking, the books are not even ready. We have to write it ourselves, and that the books should be made available as soon as possible.
Okay, let me have him answer that.
But I don't want a situation where we charge the 1% levy and then we add it to the principal before the 3% is charged. It means that it's not 4% that we'll be speculating around. It means a little more has been added. So we should know how to structure it.
Dr. Yamburkia,
so
your response?
And if I should go to the penalties and levies, or he should answer.
You answer this first, then we'll do the penalties.
So the good news to Dr. Obing is that when it comes to the flat rate, that is those who are into wholesale and retail, the administrative guidelines that we have issued, we have said that the 1% COVID levy is a straight tax on the taxable value, unlike those under the standard rate where they have to apply the levies before calculating the VAT. In respect of those who are into the wholesale and retail of goods, you don't need to apply the 1% before applying the 3% as a mean. So there's no cascading effect in this way. All you do is that you apply 1% straight on the same value and then 3% straight on the same value. Because the purpose of the flat rate was to make things simple, and therefore we have not complicated it in our administrative guideline. So it's just an additional 1%, which is for the COVID-19 recovery levy.
Yes.
And you don't need to add it before calculating your listing. So it is still as simple as you used to do. That is the assurance I'm giving to you.
Okay. And then on the penalties,
on the penalties, and then those exemptions that have been given, the reliefs that have come. You know, in the past, these offers have been made, and people hardly even do assess it. And why is it? Because we've gotten this in the past. It is because this is targeted on the recalcitrant ones, those who actually do not pay the taxes, those who actually are good in these taxes and all that, are always have redeemed their taxes and they have their tax clearance. And so the person who is recalcitrant, whichever incentive that we give, is not ready even to come and expose himself again. And that's why we wanted them to structure the whole thing again, to, if it is possible, indemnify all of us at a certain point, that anybody who have done something that was not correct, because people want to do things correctly, but because when they come out with their correct way of doing things, it will be used to judge them in the past. And so they are not even coming to even. So
the weight of sin is that high that they are not even willing to come out.
Exactly.
Okay.
And that's what is worrying the tax officials. If they are able to indemnify all businesses against what the past is, because normally post clearance will take you to 6 years back. And then the moment they see that your value that you presented have changed, maybe at this time you wanted to present the correct value. That one, the new value will be used as the benchmark for the 6 years back, and then your business will be thrown out of. That's why I was calling that this one should be cash. Otherwise, this one is there and nobody will access it, as it has happened in the past. You can bear with me.
Okay, yeah, thank you very much once again. Yeah, so the difference between this waiver and previous amnesty that we're given is that in the previous, we said that if you have not registered with the Ghana Revenue Authority at all, and then you came to register, then you were forgiven all the taxes and the penalties. And that would have been unfair to those who are already complying. But this time around, what we are saying is that, like he said, we want to play a level, or want to create a level playing field for all. So all that we are simply saying is that if you are already registered with us, but probably you didn't comply with the laws and there was a penalty imposed, or you had a tax liability which you didn't pay within the due date and there was an interest imposed, then you are forgiving the interest and the penalty. In the same vein, somebody who had previously not registered at all with us, when the person comes and want to benefit from this waiver, then the person must also declare whatever taxes he should have paid and he didn't pay. Now, by declaring, we should have imposed penalties and interest as required by the law. But what we're saying that when you come now, there will be no penalties, there will be no interest, but then you'll be made to pay the principal. So that equals you to whosoever have already been paying. So there will be no discrimination. Okay, because I have not been paying, I come, I'm getting it free, and then the one who have been paying suffers. But what I need to say is that if you are there as a taxpayer and an opportunity like this is offered to you, and you said, well, I'm afraid to go, the arms of the law will come at you. And if you don't take advantage of this waiver, and the GRA comes after, whatever penalties and interests that are there, you need to pay.
Is this not the reason why they don't come?
No,
you say the arms of the law will catch you if you don't come.
That is why we are giving you the opportunity that please come now and tell us, oh, I have done wrong. And government said, look, if you come now and say I have done wrong, then you are forgiven.
Okay.
So why will you want to wait? And let me say that you might have heard that we now have special court, or the Chief Justice is setting up a special court. Tax court. Because very soon we'll be going after people who have deliberately refused to
pay their taxes.
So the best way is for you to take advantage of this window and then make sure that you regularize your tax affairs with us, so that, you don't suffer with anything happen to you. So we want to create a level playing field for everybody. Those who have been registered and those who have not registered, you all pay the principal amount, but you'll be forgiven of interest and then penalties.
Okay. Mr. I have a few questions for you. When this government took over in 2017, they said they were moving the economy from taxation to production. 5 years on, what's your appreciation of this picture? Is that what you're seeing?
Yeah, but you can also see that government lived up to expectation by taking most of the taxes. That's why I'm even surprised that some of the problems that government is having now is self-indictment, because self-inflicted, because like the petroleum taxes and all that, most of them have been taken out.
Yes.
And then now is coming back at them. Because there are certain taxes that help all of us. Because in the market, in the business, we have said that there's no parity. All that the businesses seek is equity, that there's fairness in the tax paying. And that's why we want a lot more people to be enrolled in the tax net.
Okay. So for the one that they took away, it was a mistake 4 years ago?
No. Government was very much on course, because there were so nuisance taxes, especially when you are transferring money, you were paying interest at the bank and all that. Those things were not progressive taxes, and they were due. But let's not forget that the COVID came to throw away everything.
Okay.
Let's be very factual. Because government was so much on course, so even up to the third year, till the first quarter of 2020, where things were thrown out of there. That's where we have our sympathy even for government. Because otherwise, if you look at the losses, the expenses that government did towards COVID and all that, the alleviation that they gave, they gave us stimulus packages and all that. These were all monies that government had to fund.
Okay.
And businesses were collapsing, and government couldn't get its worth because businesses were not even performing around that time.
I'll let you hold the thoughts for now. I'll go for a break, and when I return, we'll look to what these taxes that have been introduced mean for our pockets. Because frankly, that's what it is. Many are looking at their budgets, family budgets to business budgets, and saying, what does this mean for me? And how I manage at this time. So we'll go for a short break now. You're watching State of Affairs here on GH1 Television. We're talking about the killer taxes and the state of the economy. We'll be right back.
Yo, Nana. Amanda just left me right, you know. The things I've done for this girl, who that be like me? They carry goods from Abubulo to Kaneshi.
Catch up with family and friends like never before. Just pay for only the first minute of your call and pay absolutely nothing for the rest of your call.
See, Amanda has left me. Huh? You know the most painful part? See, after 2 years for my hand, thank you. That's my last hope. Amanda has left me.
See, bro, Mr. Fakusia left me.
But you also.
Plus, you also get 50 megabytes a day just for your first call.
Could you, Charlie? Amanda left me.
Yes, she made you carry load.
Dial *550# to subscribe to MTN Free after once a day. Because we're good together.
Amanda,
we're good together.
Terms and conditions apply.
This advertisement has been vetted and approved by the FDA.
I don't go be just a moon. I don't pay me, dear, no, I don't go for me, go away. I don't go for me, go away. I'm gonna make you. Yeah, I have I need to know. Every Ghana, my move. When you say I don't go be just one, don't pay me, dear, no, I don't go for me, go away. I don't go for me, go away. I'm gonna make you.
Drink responsibly, not for sale to persons under 18 years of age, not recommended for pregnant women.
It's an exciting time to join Surfline. We've changed our prices in your favor with bigger and better bundles. Also, if you decide to get a new device, we give you 50 gigabytes free data.
I woke up this morning.
Nothing wakes me up better than a cup of cowbell coffee. Delicious coffee aroma.
How can you forget your lines again?
I'm sorry, sir, just that it tastes really good.
Cowbell coffee.
Enjoy the delicious creamy coffee taste of 3-in-1 cowbell coffee.
It's a beautiful day.
Waiting.
Cowbell coffee. Taste it, love it.
This advertisement has been vetted and approved by the FDA.
Alomo bitters. In fear do me no chini. That's so authentic.
Anio, and you ain't tribute.
Alomo, ya. Mbroma yenchi yenye. Midi akimpa question alomo. Alomo ya. Chami alomo na usisenkura. Ya koni say ya. Ya no say ya. Ya koni say ya. Ya koni say ya. Ya koni Alomo ya, mbroma yenji yenye.
Alomo Bitters, 20 years, the Camry Pakroji. Num Yansem, one Toma Nipa winning feeding watch and Sessa Pimfonum. FDR, you should say Jedian Crap to Imagiatum say, yeah.
Alomo, authentically African.
Everyone needs something. Sometimes they become person you wish you can just get a grip as soon as possible. And you will get caught with so many questions of the how, where, and when. No need to bother any longer. My name is Mama Preggy. I am here to solve all your urgent needs. Check my swag. Visit my website now at www.mamapreggymarket.com and you will find all range of products, food items, mother care, and baby items that will just suit what you need to buy or sell with a simple click.
Call us on 030-2549-813 or 050-4709-463. Download the app on Google Play Store and Apple Store, and Mama Preggy Delivery will be at your doorstep with your orders. Mama Preggy, a time limit.
You're watching State of Affairs here on GHOne Television. I'm Francis Aban. Tonight we're looking at the new taxes. Dr. Yamburikia doesn't understand why I call it killer taxes. But we're looking at the killer taxes and the state of the economy. And my guest this evening, Dr. Martin Yamburikia, the head of audit, Large Taxpayer Office at the GRA. Also, Mr. Joseph Abing, the president of GUTA. And Timor Francis Boy is a tax consultant. So as we draw closer to the end of the program, let me ask you, Mr. Abing, look, the tax have been introduced. Yeah. Already the scream in town is, goodness me, we're going to feel it in our pocket. Yeah. For you, are you going to pass on these taxes to us, the consumers?
Yeah, I'm asked to charge a VAT of a flat rate of 4%. Mm-hmm. It means that when I sell a goods worth of 1,000 Ghana cedis, mm-hmm. because I'm obliged to charge 4%, I will have to charge 40 cedis instead of the 30 cedis that I was charging under the 3%. Yeah. That's all that it means if you say that goods are going to be increased. Whether it is substantially high or negligible, that's for the people to determine. And
that's for us to decide. But for you, there, you pass it on.
I'll pass it on.
Wow.
Yeah.
You don't bear any part of it.
No, it's a consumption tax, and I don't have to bear it. It's for the consumer to bear it.
Okay, so we should brace up and just pay.
So,
for you'll be fine as businesses.
Yeah,
we should pay.
But even sometimes we do surcharge some of these things for ourselves, even to pay. Most people do this because the market, the competition out there, is such that if you overprice yourself out, you are out of the business. Because the competition is so wild out there. And so it is not that easy that people think that people deliberately are going to increase prices. But then business thrives, the cost of item thrives on expenses. So whatever the expenditure is what you add it up to get your selling price. And that's why we always say that we should do everything to minimize the cost of doing business. Even at the port, you see that there are so many other levies apart from the duty itself. Yeah. And then it comes to the petroleum tax. If fuel goes up, any expenses that are incurred as a rationale being have to add it up. Okay. And the reason why we're pleading that no additional taxes are put on us or increase or introduction of new taxes were the fact that we're coming from COVID and its problems. Because the COVID have made raw material price, international raw material price like PVC, copper, iron rods, and all that have gone up astronomically high. Freight charges have gone up from $3,000 that we used to pay for 40-footer container. Now we are paying as high as $12,000 only for an empty container.
Wow.
So that's the reason why we're saying that if it will be, government shouldn't increase some of these taxes. But you can also sympathize with government.
Okay. So you are ready to share the burden?
Oh, of course. We are meeting with GRA that will support them to be able to achieve this. What we didn't like was the fact that most people, especially in the informal sector, have been left off the hook of payment of taxes, where we are crying that we should expand the tax net. And then also there are still the tax exemption policy, which is not helping, which people are abusing. If you go to the free zone and all that, people are not paying taxes in the guise of free zone and all that. And this, we said that if we're able to manage some of these things,
it will be to our benefit.
Exactly.
Okay. Mr. Boy, let me come to you at this point. Based on what we have explained, clearly, the consumer, the family man, the one who's drawing his budget, clearly knows that it will be tough. Should there be any understanding of how long this will last for these taxes that are being introduced?
Yeah, there should have been in the act. Unfortunately, we didn't see any sunset clause. We do not expect that COVID will stay with us forever. And so the danger is that even if the pandemic is down, the taxes will still be there. We know that the taxes are necessary evil because if you look at government revenue, from February, March 2020, you notice that we started losing on all our targets.
Yes.
And so it was obvious that by mid-year 2020, we were going to introduce some taxes. It wasn't the best, but government had also spent a lot. And the economists will tell you that if you are in crisis like this, you need to spend to stimulate the economy. So the taxes were introduced. What we hope is that government probably will have to revise this policy or this law and say that maybe 2023, 2024, when they see that the COVID has subsided, then the tax will come to an end.
Okay.
Else we're going to see this tax.
But beyond that, how would you describe this year in view of these taxes, in one word?
I think it's going to be hard for us. We just have to brace up. Like we said, it is a necessary evil because government must spend. And considering our coffers, we do not have enough. The debt is also going up.
Should we cut back on expenditure?
You see, that was the best. But the question is, in times like this, the economists will tell you that you need to stimulate the economy. So we see United States spending left and right. Ghana, we must also spend. So we need to give stimulus packages to the businesses so that they can survive, employment so that it can continue. And so the only way out is to look for...
So we shouldn't cut back on expenditure?
If we have options, we could. But at this moment, I don't think we have much options.
Okay.
Is it about cutting expenditure or managing expenditure?
Okay.
Value for money. I'm telling you, some of the expenditures are overpriced.
Like what?
Oh, well, if you think about what is going on, the road sector, the builder, even the politicians themselves give these figures that this one was overcharging and all that. And so it's about managing. If we have to be encouraged to be paying taxes, because as I came here, I've been sympathizing with government. But there is responsibility of government to also make sure that there's value for money for these expenditures that we are making.
Okay.
Because we are all making sacrifices. That it shouldn't be that people are even getting advantages of expenditure. And that's what I'm talking about. So it's not about if we have essential things to expend on, we have to do. But we don't have to overprice expenditure.
Okay.
That one is not
Dr. Yabroka, you have the final word here.
Well, so what I want to say is that in life, at one point or a time, decisions need to be taken. And those decisions may lead to some undesirable outcomes. But the question you have to ask yourself is, what are the options if I don't take that decision? If we decide that we are not going to impose new taxes, then what it simply means is that we need to cut back on infrastructure in terms of social amenities. We need to cut back. If you look at it, vaccines are imported at a very high cost. We may not have money to be able to pay for them, and the consequence will be greater than the taxes that they are assessing. So
but if the majority that are paying are poor, that's tough for us.
There's always a saying that when there are two evils, you go for the lesser evil.
So this is the lesser one.
Yes, the imposition of taxes for me is a lesser evil than not doing it at all. Because if we don't, they mean that we have to continue borrowing, and we all know the consequence of borrowing, like you said, where we are using a chunk of our internally generated revenue to pay interest.
Is it because we have overborrowed, so now we have to pay the taxes?
No, not because we have overborrowed, but because we are unable to generate enough income locally, we are compelled to borrow. So we need to, first of all, generate enough income
to be able to balance the books.
Be able to
That's
balance
fine. We will leave here for now. Dr. Martin Yamborkia is the head of audits for the Light Taxpayer Office for the GRA. Thank you for coming. Also to you, Timor Francis Boy, tax consultant. Thank you for coming. And Mr. Joseph Obeng Takashima, the president of GUTA, joining us this evening. We talked about the killer taxes and the state of the economy here on State of Affairs. I'm Francis Aban. Thanks for watching tonight. Up next is Duvet with Miss Nancy. It's going to be exciting. Good night.